Hi, welcome to this video day, which is all about Forex fundamental analysis and news trading for beginners. And what I want to do in this tutorial, go through a simple strategy which will help you make profits. Now, most traders who come in the markets and try and trade the news generally fail. Now, the reason they fail is basically they misunderstand what news is important, what news isn't. Markets discounting news also have feedback loops work as well. Now, in terms of trading news, it's a very simple strategy I use to do it, and I'm just going to show you what it is in a moment. But before I do so, anyone who wants to trade the fundamentals or the news should go and study the narrative fallacy. Now, what is the narrative fallacy? Well, it comes from a guy called Nassim Taleb, who's a trader. He's written two books, okay? They are called The Black Swan and Fooled by Randomness. Now, those two books are just so highly rated by traders. I think they've been called two of the top 100 books ever written. They really will help you understand the markets and other areas of life as well, where you're dealing with uncertainty. Now, narrative fallacy is essential to understand if you're going to trade the news. So what I want to do now, it's going to take about a minute and a half. I'm just going to summarize it very quickly. It's on a storyboard coming up. Then I'm going to come back and basically discuss a new strategy that will get the odds on your side. So here's a summary of the narrative fallacy. I'll come back off that short explanation of the narrative fallacy. Now, in terms of Taleb saying the world is much more complex and uncertain than most humans think, that is true. But that doesn't mean we can't make money with a simple trading strategy. We can, just have to adopt a different mindset to the majority of traders, and we'll go through a simple strategy in a moment. Now, in terms of just talking about the news, we saw, we give that example there from Reuters about how illogical they are when they explain price action. Now, why are they so illogical? I think, today we have so much news, okay? We've got 24-hour news channels, those big news wires like Reuters, and they want to explain every twist and turn in price action. And it's all very convincing. It's all after the event. They just curve fit the news to fit the price. Now, in terms of news trading, what you've got to keep in mind is most of it is totally irrelevant, okay? And what you want to do is only focus on relevant news, so big news events, okay? So if you're trading significant news events, there'd be things like non-farm payroll, and, let's say, central bank meetings. Now, in terms of trading, let's say a central bank meeting, let's say you look on the newswires and you see that most analysts, economists and so forth are bullish of the US dollar against the euro. Yeah, they can't see any reason why the dollar shouldn't rise further. Well, that's an indication that probably the odds of a counter trend move are high. I like to look at the news and think, is there any reason that I can see why the dollar shouldn't continue to the upside? If I can't think of a reason, then that basically reinforces my view that you're going to get a reaction. Yeah, it's human nature, isn't it? Yeah, if we all think something is going to happen, it isn't probably going to happen. Now, that by itself is not enough, I think. What you've got to do is go and look at the technical picture. You want to see how overbought or oversold prices are. So let's say you put up a chart of USD euro and you've got a bullish extreme. Now, how do you measure a bullish extreme? You can do it with price action. I prefer to do it with volatility and momentum. Okay, I've done other videos on this which you can look up. If I've got a bullish extreme on the charts, universally bullish consensus in the news, I want to go the other way. Okay, now I wouldn't just go in and sell the US dollar. I would give the market the chance to prove me right. So put my order a little way back through a significant level before the news event takes place and see if the market comes in my favour and triggers me short. Okay, won't do anything in anticipation, just putting the order in. I would wait, let the market prove me right. Now, in terms of doing this, obviously it is uncomfortable because you're going against the majority. And there is a thing about you have to do learning in the market. Try it for yourself, work out the news, try different technical ways of getting in the market. It's a learning curve. You're going to make mistakes, and it's the only way to do it. You can't just go and listen to people on newswires and expect to make money, which a lot of traders do. Now, in relation to doing this, you can always be wrong, okay? There are feedback loops that work in the market, and I've done other videos on them. A feedback loop is basically, you might think that everyone who has bought the dollar has probably bought it, but that isn't going to stop more buying coming in. Let's say, traders see the price rise, they might add to their positions, okay? Or other traders might just want to come in to get in on the action, okay? So, a lot of technical traders think that all fundamentals known and unknown are discounted in the price. That isn't so, okay? If you want to understand why, just look at our video on George Soros's theory of reflexivity, okay? They're not always discounted. Traders can act after the event. So you do have, obviously, the chance of being wrong. But if you trade, like bullish or bearish extremes, look at the news, look at your charts to back you up, then basically place your order in an area where you think the market is going to prove you right. You will make a lot of money over the longer term. Now, in terms of a lot of traders, they kind of look up to all the economists and so forth that are on the newswires. They can only explain it backwards. Markets don't move to just pure economics. Humans are involved. They're greedy or fearful. They always push prices too far, okay? They're also very unpredictable as well. So when you're trading these major news events, really just restrict yourself to major ones, and always, if you can, go against a bullish or bearish extreme, because that is going to give you the best risk to reward trades. Now, in terms of the subjects I've been discussing in this video, like contrary trading, theory of reflexivity from George Soros, you can look up other videos on our site. This is just a brief introduction. Now, what I would say is if you're really serious about making money from the markets, I've always been a big fan of reading classic books, and Nassim Taleb's the black swan and fooled by randomness are fantastic. He's a successful trader, and he really helps you, become an independent trader. Go against the majority. Don't worry, if you get things wrong. You just need to basically learn in the market. Okay, but what I've just said in that way of trading, it will basically put the odds on your side. You're not going to win every trade, of course, but over the longer term, you can make a lot of money and join the minority of traders who come out ahead in the markets. And just before I go and check Reuters for yourself and see how often they say that, when a market, it's been moving strongly up, suddenly pulls back and they can't see a reason. They'll say, traders booked profits. In fact, that phrase is fantastic to alert you to a contrary trading opportunity, because it very often happens when you've got a bullish or bearish extreme in the markets. They can't explain the move, which means the buying or selling power has probably run out. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.